Hey, my name is Tucker Kraus, and welcome back to my channel. In today's video, I got another news update for you guys, so let's not waste any time and get right into it. Alright, so BHP uranium production collapses. Well, I'm being a little hyperbolic here, but still. BHP sold 3.3 million fewer pounds in the full year 2022 compared to full year 2021, and I should note BHP's fiscal year ends June 30th, so of course that makes a little bit of a difference here, and so that's definitely substantial considering that is equivalent to 2.6% of 2021's total uranium production, and so of course when there's already a massive supply deficit, when there's even less supply, that's not going to help. So we had some bearish housing numbers come out. So first up, housing starts were negative 2% month over month, and expected was a 2% gain month over month, though to be fair, this isn't anything crazy. This goes back to about 2017 here, and we can see it's regularly this low or even lower. So it's more important to watch, are we going to get a substantial amount of time where it's all going to be in the red compared to, flipping back and forth between green and red like it has been for the most part over the past couple of years. And housing permits were negative 0.6% month over month versus an expected negative 2.7%. And once again, we can see here, it's nothing even too crazy out of the ordinary when we look back past these couple of years. So I do have this here because that'll be for some of the others I'm going to look at with a different chart. These ones honestly aren't too bad. Of course, it was still in the red, which still isn't good, but this definitely isn't too bad quite yet. This one is probably the one where it's a little bit worse. We can see existing home sales were down 5.4% month over month when expected was negative 1.1%. Now we can see once again, yeah, it's constantly going between red and green, though we can see here it's been a lot of red with not a lot of green over the past couple months, and that red has been quite red, right? We can see negative 5.4. We can see when we look back here, it's probably only negative 1, negative 2 if I were to judge off this chart here, looking back at the past couple of years for what all that red is. So this one is certainly a lot more bearish, but once again, there's still nothing crazy because we can see it's still not even close to where it was in early 2020. So this is going to have to be keep watching. Certainly no recession or straight up 2008 housing crash quite yet. Alright, so for some uranium news, Vimy Resources and DYLLF's merger is now official. So Vimy Resources shareholders approved the acquisition of the company by DYLLF. This is the first substantial uranium stock acquisition of this bull market, potentially showing what's to come. So yeah, that's definitely pretty interesting because this is going to create like a global uranium company in a way here, right? Because DYLLF's in Namibia, Vimy Resources, their mines or deposits and projects, I should say, are in Australia. And so of course, we'll have to see if we continue to see more acquisitions. Yeah, we say UEC acquire UEX, but I feel like this is, or something, I don't know if they finished the acquisition or what's going on there, I'm not entirely sure, but this feels a lot more substantial because these mines will actually come online. Sorry, UEX and UAC shareholders, that's just my opinion. So yeah, it's definitely going to be worth it to see what other companies begin to merge and, which companies acquire others and that sort of thing, because that shows that the market is, of course, growing. Alright, so ECB hikes rates. The ECB hiked rates by 50 basis points from negative 0.5 to 0%. Wow, that's really gonna do a lot of help, isn't it, guys? Because 25 basis points were expected, so they did go a little higher. But of course, this is gonna do like nothing, obviously. And they also revealed a new bond purchasing program. So of course, they're not serious at all here, right? Wall Street Silver's tweet here puts it pretty well. So raising interest rates in the euro area. However, at the same time buying unlimited bonds to keep interest rates artificially low in Greece, Italy, and Spain. Classic European kick the can down the road and avoid reform, because essentially this is a new program that is going to let them selectively do QE and QT. So in the supposedly stronger economies like Germany, though that's probably going to change, as well as the already weak economies like here, Greece, Italy, and Spain, it's supposed to try and make sure that, hey, Southern Europe isn't completely collapsing so that, you buy all the Southern European bonds while you're not buying as many Northern European bonds. So it should hopefully balance everything out. That's at least what the ECB wants to do, because of course you can see like the yield spreads between places like Germany and Italy are crazy right now, and so of course they're trying to avoid that as they hike rates. Alright, speaking more of Europe, so Nordstrom pipeline resumes deliveries to Europe. This relieves some pressure on the European economy, primarily Germany, because it was initially being speculated that Nordstrom wasn't going to turn back on after it was down for maintenance. However, I should note it's only going to be running at 40% capacity, which is less than where it was after the Ukraine invasion started, and of course it's even lower than where it normally is pre-Ukraine. And so, however, even with this news that Europe will be in an energy crisis this winter, although they pretty much already are, that's my opinion, that's a lot of other people's in this space opinions, so of course that's kind of what I'm going with here. I wouldn't be surprised considering when you already look at how prices are doing and shortages are going on in Europe with energy. early. And of course, winter is when that means like really bad signs because of course, heat. To keep going, of course, to something that's, not quite as bad as what's happening in Europe, though still not necessarily good, US PMI collapses. So July composite PMI, which is a combination of both services and manufacturing, was at 47.5. 52.4 was expected, and June was 52.3. And I should note, above 50 indicates growth, below 50 is decline. And so we have a quite substantial decline here for the month of July. July services PMI 47, expected 52.6, and June was 52.7. July manufacturing PMI was 52.3, expected was 52, and June was 52.7. So composite and services are lowest since May 2020, and manufacturing is lowest since July 2020. So when we take everything here, it's definitely being dragged down a lot more by services than manufacturing. Manufacturing does seem to still be strong because it's still growing, though of course we're now seeing people like Ford alongside all the tech companies begin to slow hiring, lay people off, that sort of thing. So we're definitely going to have to watch if manufacturing ticks to the downside below 50. Since, of course, we can all see that, manufacturing, it actually even beat expectations, while services and composite lost quite substantially. So yeah, definitely not good for services, but we'll have to see if manufacturing begins to tick down or if that's going to remain strong. This is not financial advice. Do your own research. Thanks for watching, and I will see you next time.